Good afternoon. Seth Little here with Anthony Law Firm here in Ridgeland, Mississippi. I wanted to talk to you today about marriage and taxes. We are in the midst of the wedding season. It's middle of May right now. Lots of folks getting married here in the next few months. So wanted to speak about a topic that not a lot of people probably think about when they're getting ready for that big day, which is you and your spouse's tax situation. This may not be applicable if you're in your early 20s, just getting out of college, getting married for the first time. Probably not a big worry right now. But if you are later on in life getting married, or maybe this is a second marriage, this is something you probably need to think about. So, you don't want to get that situation where you get married and you move in, every assets are intermingled and put together, and then all of a sudden you get a letter about your spouse's enormous tax debt that you knew nothing about. And all of a sudden now your assets are involved, your wages are involved, you're in the middle of it, even though you didn't know anything about it. We're going to go over some steps and some things that you can do if that situation does arise. Number one would be get tax transcripts. So tax transcripts are just something that is an overview of your tax account with the IRS. It shows any amounts you have owed, shows the returns that you filed, the amounts that you paid, when you paid them. If you've gotten any letters from the IRS, those will show on there and show when they were sent. If there's any liens, levies, any actions the IRS has taken to collect on tax debt, that will also be on there. So it's just something that gives you a good overview of what's going on with either your account or your spouse's tax account. That's the best thing. That can be done on IRS website, or a tax professional like myself and my firm. We have software that can get those pretty easily within a matter of days. Just gives you a good overview of what's going on, and maybe everything's good and you can move on with life. But maybe that'll minimize any surprises that might come down the road. First thing would be to get those tax transcripts. If you do get those tax transcripts and there's a massive debt or just something that you need to deal with your spouse's tax situation, that's where we get into some of these other steps that you can possibly take. First of which would be consider filing separately. If you're not married yet, obviously you've been filing separately this whole time. Obviously, once you get married, filing jointly is a common thing that you do with your spouse. But if your spouse does have that pre-existing tax debt and that's out there, you may want to consider just filing separately, at least until you can resolve that tax debt and get it out. That way your assets and your income are not affected by the tax lien. Any refunds that you might get will still come to you. That way your refunds aren't used to pay your spouse's tax debt. Now, I know a lot of people want to file jointly because of the benefits and the refunds and just the tax benefits of that altogether, which is understandable. But if there is a tax debt situation like this, is something you may want to consider, at least until the tax debt is resolved. Another thing you could possibly do is apply for injured spouse relief. Now, this is a little bit different than the innocent spouse relief, which is completely separate, not the same thing. Injured spouse relief is something that you can apply for if you do still want to do joint returns with your spouse and there is a tax debt situation with your spouse. You can still file jointly. You can file a form with your tax return. It's a form 8379 for injured spouse relief, which basically just spells out your assets, your income, what your refunds and deductions are, and asserts that you're not the spouse that has the tax debts. If there is a refund that is due to you because of your tax situation, if you do file that with your tax return or shortly after you file your tax return, you should still be able to get your refund. That way that refund is not used to pay your spouse's tax debt. Another way you can do it is with the injured spouse relief. Another piece of advice, until at least the tax debt is resolved, would be to keep your assets separate, meaning separate bank accounts. Any assets that could be attached are considered community property once they're intermingled with each other after you get married. That's fair game to the IRS if they have a lien or levy. What you need to do until that tax debt is resolved is to keep those assets separate as much as you can. That way, if they do levy and do start getting assets to pay that tax debt, you can still have some of those assets for you and your wife or husband to use. After all that, you're keeping assets separate, you're getting your injured spouse relief, you got the transcripts to see what the exact tax situation is. One of the things you definitely need to do is explore tax resolution options, which would include offer and compromise, which we talk about in another one of our videos. You can do a payment plan depending on the amount of the tax debt. So if you're looking at a tax debt of around $40,000, $50,000, which may seem insurmountable or like a huge amount, the IRS is willing to work with you on that and do these payment plans and let you pay that off on a monthly basis and not have to worry about liens or levies or the IRS coming in and taking any of your assets. If you got an amount like that your spouse owes and it just seems like a ton that you're paying for a wedding and you can't handle that right now, just apply for a payment plan. The IRS is willing to take those. They want to get paid something. And if it's something a little more than that, $100,000 or more, you probably need to consider an offer in compromise where you're asking the IRS to take a reduced amount, and then they'll look at your assets, income, your liabilities, anything that you could use to pay those tax debts. And then hopefully once they review all that, they'll be able to accept a lower amount for you. These are all some things that tax attorneys typically handle, probably not something you want to handle on your own. Tax professionals such as our firm typically handle these, and we would love to help you with that. Last thing, consider a prenuptial agreement. While these don't mean anything to the IRS, if you have a spousal tax debt, you have your assets together, the IRS comes after you, you can't show them a prenuptial agreement and say, here, look, we agreed that I'm not responsible for this. Yeah, the IRS doesn't care about that. But it can be helpful in the case if there's any disputes over who's going to pay the tax debt or be responsible for it between the two of you. If there's a divorce situation and there's some lingering tax debt out there that was the spouse's only prior to marriage, that prenuptial agreement will help you navigate that. So that's a last consideration to do on that one. And lastly, like I said before, just consider consulting a tax professional. Once you look at that transcript and if there's a tax debt out there, or maybe if you get that transcript and you don't really understand what it says, or you don't want to even start with getting the transcript, you just want to get a tax professional to help you with that from the get-go. This is all something we do. We get transcripts, we get with the IRS on offers and compromise, payment plans. We can give you several options to hopefully eradicate that tax debt so you can move on with life in your marriage. Consider giving us a call or visiting our website at www.dajtaxlaw.com. You can also reach us at 601-944-4290 for any advice on this and any other tax matters. Take a look at our other videos and join our channel, and everybody have a great afternoon.